Edward Jones Managed Account Features, Strengths, Weaknesses. Edward Jones offers a managed account program designed for investors seeking a personalized, hands-off approach to investing. Key features include discretionary portfolio management, meaning Edward Jones advisors, backed by their research teams, make investment decisions on your behalf. They use a model-based approach, offering various risk-based portfolios constructed primarily using mutual funds and ETFs. The program emphasizes financial planning integration, aiming to align investment strategies with your individual goals, risk tolerance, and time horizon. This service is generally targeted toward individuals with at least $25,000 to invest and who prefer a full-service, in-person advisory experience. A significant strength is the personalized guidance. Having a dedicated advisor provides consistent support, regular reviews, and tailored advice, fostering a strong client-advisor relationship. Edward Jones' extensive network of branch locations allows for convenient access and face-to-face meetings, a benefit many value. Furthermore, the firm's established reputation and conservative investment philosophy can appeal to those seeking a more traditional approach. However, there are definite weaknesses to consider. The fees associated with Edward Jones managed accounts are generally higher than those of robo-advisors or other online platforms. These fees typically encompass advisory fees, underlying fund expenses, and transaction costs, potentially impacting overall returns. The investment options are often limited to pre-selected funds and ETFs within their models, potentially restricting access to a wider range of investment opportunities or individual stocks. While the personalized service is a strength, it can also be a weakness. The quality of advice can vary significantly between advisors, making due diligence in selecting a suitable advisor crucial. Another potential con is that Edward Jones tends to cater to a more conservative clientele, which might not suit investors seeking aggressive growth strategies. It's important to carefully evaluate the fee structure, investment options, and advisor experience to determine if it aligns with your individual needs and investment goals. Before committing, compare the costs and services with other managed account options, including those from Vanguard, Schwab, or independent RIAs. If you value the in-person relationship and don't mind potentially higher fees for that level of personalized service and are comfortable with a moderately conservative approach, Edward Jones could be a viable option. However, if you prioritize low costs, investment flexibility, and are comfortable with digital platforms, other alternatives might be a better fit. Ultimately, the best managed account for you depends on your unique financial circumstances and preferences.